Welcome to Joe's Investment Express, the runaway train of YouTube investment channels. And for those of you who are new to this channel, I specialize in technical analysis. I've been studying charts for about 25 years now. And I also do some fundamentals, of course, and I look at some mindset, investing mindset / market psychology. So I've got about over 100 videos. You might want to check them out. Now, I feel it is my moral obligation to throw some cold water on the raging fire of overexuberance regarding Amazon and its 20-to-1 split. And I get it. This is first level. This bullishness is first level stuff. A big stock split shows management's confidence in the stocks, and it allows many more retail investors who can't afford the high stock price to get into the stock. I get it, but when we look at the charts, I think you're going to see what I'm concerned about. I'm just looking at my notes. I got a lot to say here. So first of all, beware of confirmation bias. You formulate an opinion, and then you seek out information, articles, and YouTube videos that support your opinion. We have to be aware of that. Secondly, we cannot automatically assume that the past leaders are going to be the future leaders. And in Amazon's case, they had a virtual monopoly on online sales of merchandise for a long time. But their market share is being eroded. Costco's building out its online sales. Walmart has a strong online program now. Etsy, all of those different companies are slowly but surely stealing Amazon's market share. Now, if Amazon had decided to split 2-for-1 or 3-for-1, I'd feel pretty good about that, and I would be supportive, or even 5-to-1. But 20-to-1 split, that seems very overexuberant. And as you'll see, I'm going to show you a William O'Neill concept that excessive stock splits often mark investment tops. And not only is this overexuberant on the part of management, but maybe, just maybe, it's even a little darker. Maybe they realize that their chart is starting to roll over, and maybe they realize that they're losing market share, and maybe this is kind of a Hail Mary to bring new investors into the stock. Now, I really hope that none of this is true. I know a lot of you have a lot of money invested in Amazon and want to continue holding it long term. So, yeah, I hope I'm wrong, and this is obviously just my opinion. Now, let me show you what William O'Neill had to say about this, and hold on a sec. So this is, in my opinion, one of the great, in the top 3 investment books, How to Make Money in Stocks, William J. O'Neill, legendary investor. And on page 264, he says, and I quote, "Stocks tend to top around excessive stock splits." And if you look here on the internet, here's a IBD article about that very concept, that investors love stock splits, too many can mark a top. And this basically goes on to say, if a stock splits over and over again, ultimately that's a sign that it's running out of steam. But I would argue that it's not just the number of splits, but that it is also the size of the split. And market tops are often marked when you see a great big split, a 10-to-1, or in this case, a 20-to-1. Now, if you're still with me, let's look at the charts. This, of course, is the Amazon 20-year chart. Let me make this larger here. And there is no argument that this is not a thing of beauty. Well, look at that wonderful 45-degree uptrend. But one, you'll notice we are beneath this trend line. Now, it's happened before and it's come back. So, okay, you got me there. But look at the number of bases. Now, drawing bases is an art, not a science, but I count at least 6 bases here. And basically, each time a stock bases, there's a greater chance of the trend failing. Normally, after 3 or 4 bases, a stock rolls over and goes into a stage 3 top and then a stage 4 correction. And this is the 6th base. So that is concerning. Now let me show you what is even more concerning. This is the 20-year chart. If we look at the 2-year chart, we see something else entirely. We see a lot of churning action where just tons of volatility. This is from mid-2020 to mid-2022. A lot of churning without much price progress. And then we see a breakdown of this very definitive support line. I made it nice and large. And then we saw the stock bounce back, retest the support becomes resistance, fall off again, and now it's just kind of consolidating. Now I suspect that what's going to happen is it's going to run up. People are going to be excited and buy into the hype of this split coming. It's going to run up to this resistance line again. And then when it splits, I'm worried it's going to roll over again and start a stage 4 decline, the type of which we are seeing right now in Facebook. Let's look at 2 more things. Now here is the press release, and I'll put that IBD article about stock splits, I'll put that in the description for you guys. Here's the press release. You can look at this as well. And I want to just tell you that it says, we'll provide shareholder of record at the close on May 27th with 19 additional shares for each one held on or about June 3rd. The split happens on June 6th. So you got to be in by May 27th, and then the split happens on June 6th. So probably it's going to run up. In theory, it would run up until May 27th, although the general market is so bad right now that maybe that won't even happen. And then it splits June 6th. So somewhere between May 27th and June 6th, if my theory is correct, we're going to see this thing start to sell off and not return for months, if not years. I hope I'm wrong. Now let me show you one other thing here. Here's the Market Smith breakdown of Amazon. And as you can see, it's making so much money per share. $64 per share in 2021, but $48 per share in 2022. But that's not what I wanted to show you. Here we see fund ownership. There are 5,100 funds in the stock right now. Oh, I'm sorry. I'm looking at that backwards. That was in March 2020. The last time it was reported, December 21, there were 6,500 funds in this stock. Now, I know if you've read some investing books, they say the more institutional ownership, the better, because these guys, the ones with the big money, and they hold it for a long time. But Mark Minervini said something not too long ago that really hit home with me. He was talking about one of these big caps rolling over. I cannot remember if it was Facebook or what. And he pulled this up and he said, you see all of these funds in this stock? Do you know what this is? This is potential supply. Meaning, if these guys start to sell, it's not going to be one mutual fund selling. It's going to be thousands of mutual funds selling. And it's going to be like a dam opening the floodgates. Cue Facebook chart. So ideally what you want is to get into a stock with just a handful of funds owning it, and then gradually watch that number increasing up into the thousands, and then that's when you want to be wary. So in summary, I know a lot of you are long-term holders and you're excited to continue buying Amazon. I don't own any Amazon right now, and I'm really concerned about the long-term direction of this stock. So I just really urge you to be careful buying right now. And if you do, be ready to sell if the stock rolls over after the stock split. Well, let me know your thoughts in the comment. If you disagree, comment section. If you disagree, that's totally fine. I'm really interested in hearing contrary opinions to my own. Enjoy the rest of the weekend. Take care, everybody.